In the second quarter, we saw many of the trends from the first quarter reinforced. Yield compression was a common theme across all markets, office, industrial, and retail. In the case of the office market, we've now seen prime yield compression of 40 basis points over the past 12 months. And this is despite vacancy rates remaining in double digits across many of the CBD office markets. The average CBD vacancy rate is currently 11.9%, which is neatly in the range of 10% to 12%, where it has been since the middle of 2013. In the retail sector, likewise, we saw more yield compression, particularly in the sub-regional sector, where yields are now about 50 basis points down over the past 12 months. Supporting the yield compression story in the second quarter was another interest rate cut by the Reserve Bank. The cash rate was cut by 25 basis points early in May. But unlike the first quarter, we saw yields, bond yields, bouncing back. So what has been driving the yield compression cycle? Firstly, the weight of capital. That theme continues, and with equity and debt readily freely available and at competitive prices, the demand for prime grade assets continues. Secondly, we seem to be seeing more investors who are willing to buy into the lower for longer theory about the future trajectory of interest rates. And thirdly, we're seeing improving fundamentals across many of the markets. In the retail sector, for example, retail spending, retail turnover growth seems to have stabilized back around 5%, which is the long-term average level. In the case of office markets, particularly Sydney and Melbourne, we've seen a return to positive take-up of space. The Sydney market has now recorded 6 consecutive quarters of positive net absorption. In the case of Melbourne, we've seen 5 consecutive quarters of positive take-up. As a result of that, the vacancy rate in Sydney is now down to 7.8%, although Melbourne remains above 10% due to a strong supply pipeline. In the case of the other office markets, the picture is more mixed. In the case of Perth, for example, the vacancy rate is 17.4%, and we expect it will go higher over the remainder of this year. But even in these markets, we do seem to have seen a stabilization of tenant take-up of space over the last 2 quarters. The yield compression story is not over yet, but we do think we're coming close to the trough. Over the second half of this year, we think that further yield compression will be validated by a number of major transactions in the pipeline. But it seems likely that we will see the trough in the current cycle either towards the end of this year or early next year, rather sooner than we had previously expected. Offshore investor interest in the Australian market remains strong. There seems to be no sign of that abating. And the impact of the weaker Australian dollar, which now seems to have stabilized around 74 cents, is certainly an attraction for a number of offshore investors. On the supply side, we're looking at a reasonably robust supply profile across many of the markets over the next year or two. This is partly the impact of yield compression, which makes construction increasingly attractive and speeds up the rate of obsolescence of older stock. Even though we believe we are coming towards the end of the current yield compression cycle, we don't see yields bouncing back quickly anytime soon. This is partly because the yield gap between property yields and real bond rates is currently around 200 basis points more than average. So there's a good deal of comfort built into current values, even if and when, as they surely must, bond yields start to move higher again. Another feature of the second quarter, of course, was the political uncertainty in Europe as a result of Greece and financial volatility in China. We haven't seen any flow-on effect onto the commercial property market in Australia as a result of these events. And if anything, these sources of uncertainty are likely to be a positive for many investors looking at Australia, because they will probably emphasize the safe haven status which Australia enjoys.